Hello, this is the Unemployed Value Degen, who is not giving financial advice. You have to conduct your own due diligence. But I wanted to spend some time looking at the technicals on some of the stocks that I've recommended on my Substack, especially now that we have this ongoing Trump rally, and well, two large things going on. In front of you, you can see the 10-year Treasury, and last time we spoke, I talked about, well, this rise in the 10-year Treasury after cutting rates. Is this rise, is that going to break the trend line? And one day doesn't really make a pattern, but it looks like it just touched the trend line and started falling back again. So there's good odds that we're about to have a falling 10-year Treasury coinciding with this massive euphoria from the Trump election. I've gone ahead and I've just made a channel to kind of see where is the 10-year Treasury going to be, say, middle of 2025, maybe between 3.2 and 4.0%, maybe end of 2025 between 3 and 3.8, something like that. Middle of 2026, you start getting a channel that's about 2.8% and about 3.6%. And I have a hard time believing that the 10-year Treasury will keep going on that trend longer than middle of 2026. And it could also change directly before that, because this is all going to be tied to the Federal Reserve's responses, the market's attitude, the inflation data as it comes in. But right now it looks like we're trading in this channel for the 10-year Treasury. And I think the market's behaving that we're in a cutting cycle. And there's a lot of market participants that think we're going to see a 2.8% on a 10-year Treasury. But that brings it, right about to the middle of 2026, which is interesting because we have an S&P 500 that is at new all-time highs, and the price to earnings ratio, even on the 493, right? Not the Mag 7, but the 493. That price to earnings ratio is historically above average, and it's a little worrying, right? We've got this massive Trump rally, and I'm wondering if when it's going to get exhausted. We're at this world where there's only, I think, 2 data points in the last 50 years where the Federal Reserve cut the benchmark and the 10-year Treasury rose. That's a sample size of 2. It's hard to get any information out of that. But with the S&P 500 in this election, it's never happened before that we rallied into the election and then rallied after the election. There's a lot of post-election pops, but we were rallying on the S&P 500 approaching the election. So rising before the election and rising afterwards, that's a sample size of 0. So there's really not a lot of historical data about what's going to happen. There's a lot of people pointing at seasonality right now. Seasonality that November and December, you have the Santa Claus rally, it's a great seasonality. And then January is an opportunity for a change in leadership, as everybody wants to take profit so they have a full year to use that money before they have to pay taxes on it. And then you have the phenomenon, well, if everybody knows that there's usually a rally post-election, and also historically there tends to be a bit of a collapse after inauguration. So the historical trend is after election there's a rally, and then after inauguration there's a collapse. But this is a world where everybody has that historical data and everybody knows it, so maybe they'll front run it. November, December tend to be strong times, but we're already expensive. So this is just a wild time right now, especially on the S&P 500. Let's look at the NASDAQ. On the NASDAQ, so this is interesting because up until the Trump rally, we had not broken through the resistance from July. So the July high had held up until Trump's election. I find that interesting. So is the now that the Republican Party has a vice presidential elect that has venture capital experience and is friendly with Peter Thiel, Trump had fundraising with Chamath Palihapitiya and David Sachs, and now that the Republicans are aligned with Silicon Valley, is this the sky's the limit for tech stocks? And that surprised me, because I saw this top in July as saying, are we finally going to rotate out of some of this tech momentum? Because I'm definitely agree with the idea that artificial intelligence is going to be this 10-year industrial revolution. But in the middle of a 10-year industrial revolution, we can overdo it in the short term, and we can pull back, and we can have some rotation in other sectors. But this post-election rally makes it seem like, well, maybe the winning trade in 2025 is going to still be tech and artificial intelligence. And boy, would that frustrate an awful lot of people. And then we'll take a look at the Russell 2000. And the Russell 2000, let me go back to 5 years. Is this finally breaking out of its doldrums? See, we have, yeah, so we just, it's not really above the previous high enough to really confirm it. But the real resistance line was that thing, right? That's a much stronger resistance line. And it looks like we're pretty far above that on the Russell 2000. So maybe the the 1 year out of 20 that small caps outperform, well, maybe we're on that. And as a small cap value degen, I would really enjoy that. If this is the 1 year out of 20 where small caps really outperform, we'll have to see. I mean, it's just, the Russell 2000 doesn't feel expensive, but the S&P 500 feels expensive. And the difference in the amount of money between those two groups, I mean, the entire Russell 2000, I think, is less than $2 trillion. And that's half of one of the Mag 7 stocks. So if there's a 5% drawdown in the S&P 500, and that money's chasing small caps, that inflow, it really can't hold that much money. I mean, the companies are so small, that much money chasing the small caps would make them explode. So we'll have to see if there's any sort of rotation going on at all. But that's the thoughts right now, is we have things that have never happened before, right? We have, and it's only happened about twice in the last 50 years, that on a cutting cycle, the 10-year Treasury rose. And the good news for that is, when that happened, I think one of them was 1995. And the 10-year Treasury rose because the recession risk went down. People buy bonds for recession risk. And if the Fed has everybody's back, right? If the Fed put is on and the Fed is cutting, that means there's probably not going to be a recession. And if there's not going to be a recession, you can go ahead and sell your bonds. That makes sense. And if we are in this temporary declining cycle, the question is just, how far is it going to go? Are we going to get these falling 10-year Treasuries? Because if we get, if we see a 3% 10-year Treasury and the 30-year mortgage spread stays 2.5%, well, that's 5.5% on a 30-year mortgage. I think the existing housing market would explode at 5.5% on a 30-year mortgage. And that looks like that would be hitting, as early as the end of 2025. But we'd have to see. We'd have to see if this trend line continues. So let me go ahead and jump in to some of the larger stocks in my model portfolio and see how the technicals look. Mitch is not able to join me, so this is really amateur crayon hour. I'm nowhere near as good at technicals as Mitch is, but he's right in the middle of earnings season, and all the companies that he covers, they all announce at the same time. I don't know why they do that. They don't spread themselves out over the earnings season, but he's a little too busy. I also have my crime against yerba mate. So there's yerba mate comes in two different varieties. There's kind of the pulverized powder, and there's the leaf version. And the bodegas near me, they have the bombilla, the straw, for the leaf version, but then one of them carried the pulverized powdered version. So I've got yerba mate through a coffee filter because I don't have the right bombilla for the powdered yerba mate. So my apologies to Benji from the ROI Club and everybody else who's into yerba mate, but I'm drinking a really crime against yerba mate. Okay. me take a look at Medical Properties Trust. Now, this is my largest holding, and it had this. I think it's a fantastic stock. I usually don't like real estate investment trusts. There's just I find them to have not enough torque, very limited upside. But Medical Properties Trust had this aggressive short selling campaign, and I thought the short story was really just wrong. That when the tenant goes bankrupt, the real estate investment trust is still going to own the property, and it's going to get re-tenanted quickly. And all of those things now are coming to fruition. They're coming to a close. I feel like it's in the end game. And this very last day where it jumped up from about 469 to 491 was again just the resolution for one of their problem tenants. They had two real key problem tenants. And the short interest on this thing, it's like something like 18 days of average volume to cover the short interest. It's got a massive short float on a real estate investment trust that owns acute care hospitals. It just doesn't make any sense. Looking at the technicals, and just a little bit of what I've tried to learn from Mitch, down here at the MACD, you've got this, and again, this is a coincident indicator, it's not a predictor, but you can just see that the period of falling, right, the speed of the falling has slowed down, and we might have flipped over to a period of the stock rising. So I think this might be on an uptrend, and if it's on an uptrend, does it trigger a short squeeze? There was a couple attempts at a short squeeze. There was one back in May. There was one in September where it went from, $4.50 up over $6 and then crashed back down again. But I think it's in the end game now because the tenant problems are all behind them. Maybe the price doesn't really catch that much of a bid until they raise their dividend, and that could be as late as September of next year. As far as the technicals go, we've got, you had the golden cross was in June. So the 50-day moving average is above the 200, and it's pretty far above the 200. So this is a rising trend. And then just in the recent inflection, the MACD is saying that this is the short-term falling could be over, and the long-term rising is still underway. And the RSI says that it's not overbought. It's right here in the middle at 50. So I think that's a pretty decent chart. Now, I was really early on Medical Properties Trust. If I was smarter at the technicals and the timing, I could have saved myself 2 years of headache and just bought it right now and probably have a lower entry price than what I've got. But I still think it's a fantastic opportunity and a fantastic stock. Transocean. So the offshore stuff, that is so ugly. There is a little bit of hope just in this since the beginning of November. This thing has been on the way down. How long has this thing been falling now? It's been falling really since October of 23. It's been a painful time coming down from 8. And that's a pretty big washout, and it's hard to tell if we're really in a new rising period, or if we're just still going to be consolidating for a while. You've got the 50-day moving average still way below the 200-day moving average, and there's a huge gap there. But at the same time, maybe my eyes are deceiving me. I don't know if this is quite a high or low. This thing might be channel bound for a while, right? Is that a higher low? Yeah, it really might be stuck in a channel for a while longer. I still like Transocean. It's a very large weight in the portfolio. I think the long-term thesis is still intact. Not only that, last quarter they were free cash flow positive, which is a big step. Then there's all the drama about whether or not they're going to acquire Seadrill. I'm not seeing much in that chart that tells me that there's any evidence that the price is going up in the next couple of months. So for the short term, there's not a lot of hope there. For the longer term, I'm still pretty bullish on the thesis. Let's see. My next largest position, Forward Air. So Forward Air So it's still the 1 year. See, I think I wrote about it when it was trading at about $19. And since that time, it had that activists were doing some aggressive buying. But those activists took control and are pushing for a sale. And the sale price, you know, people are saying, well, would I buy it here? But when you know an activist is trying to take it private, if there's just some volatility, right? If the stock price is currently 35 and they, you know, take it private at 42, they say, well, it's a premium to the stock price. It's a huge discount to what I think the company's worth, but it's a premium to the stock price on that day. It had traded up to about the $42-ish range intraday there, and it settled back down. You've got, you know, RSI is about 50. MACD is, you know, it's been struggling for a bit. You do have the golden cross where the 50-day is above the 200-day, and that took place in early October. So it's, and last earnings, they were net income positive, but by less than a lot of people thought they'd be. But one of the nice things about it was the Omni acquisition was growing at 7%. And all evidence points to the Omni acquisition was good, but expensive. If they just had the time to digest that and to get back into a bullish freight cycle, I think it would be a fantastic company. The question is private equity going to take it private before that? And I think there's good odds they will. If it does get taken private and I get that short-term pop up to a price of a 42 or a 45, that's fantastic. I would go ahead and I'm going to rotate that money when I get it into Heartland Express. That's the other logistics company that I like. And again, this is a major Trump trade. So right on the election news, people said, well, logistics under Trump, if they're going to put tariffs, if there's going to be less ocean freight, there's going to be more land freight. So it did have a huge bump from the election. This is one of those circumstances where the 50-day and the 200-day are really close. And Mitch is telling me that means that this is, it could go either way, and it could go either way in an extreme way. So maybe the smart thing is to rotate from Forward Air to Heartland Express now. Maybe the smart thing is not to wait, because this might really be a coiled spring. This thing could go either direction. We'll have to see. But I like this one for the long term. I spent a lot of time listening to the CEO, who's the son of the founder of the company and the grandson of a guy that was, so they have a long history of buying trucking companies and fixing them up and selling them. And then at one point, you know, somebody from Wall Street said, hey, instead of selling it, just sell half of it and keep the other half and be public. But for 3 generations, they've been buying trucking companies, fixing them up and selling them, and doing it pretty well. And if we're heading into a really good logistics period, I'm really strongly considering selling my Forward Air and buying Heartland Express now. Doing it on my own terms instead of waiting for private equity to take it away from me. But they either one of them could easily be a triple. I just have no way of knowing which one's going to move first. But this one, when the 50-day and the 200-day are so close, Mitch tells me that's a recipe for explosive moves one way or the other. Let's see now, a stock that when I wrote about it, it was 25, and it immediately got cut from about 25 down to, you know, 8 or 9 or so. So I had some unhappy readers. A stock with a lot of drama, and when I brought it to Mitch, what he told me is that there was no resistance yet. Stay away, don't buy it yet. There's no clear resistance, and I'm wondering if now there's finally resistance. I'm wondering if the floor is in. Let's see now. The 50-day is really far from the 200-day, but there has been some positive news. So they had a quarter with positive net income. EBITDA went from 125 back up to 175 million, which is exactly what they said it would do. They did guide a little lower than they had previously guided toward, but I don't think that they're in. I don't think they're in as much imminent danger as the marketplace thinks they are. Now they're just bounced off the top of that Bollinger Band. They're right in the middle of the range. Who knows where it's going to go from there? on the short term. But does this look like there's resistance? So you have this trend where there was lower highs. This is a pretty steep channel, but there was lower highs to here, to here. Those are all lower highs. And it looks to me like this earnings call broke it out of that channel. There's the lower lows, and it looks like the lower lows story is over. So it's not a beautiful chart. It's not showing any signs of a breakout. Doesn't show signs of positive momentum, but the floor might be in, right? You might not see it crash below this level. So what Mitch told me originally, I think I asked him when it was closer to 12. I think I asked him around here. And around here, he told me there's no resistance, the floor is not in. And he was completely correct. And since that time, it crashed to much cheaper than where I didn't listen to him and bought it. Is the floor in now? And it might be. It might be finished falling. Let's see. One of my favorite stocks, ProFrac Holdings. This is a huge Trump beneficiary. So they do oil field services. They have about 40 fleets of frac trucks. And that had a huge, it was up 12% on the election. Now the 50-day is way below the 200-day. They're wide apart. You've got, it bounced right off that Bollinger Band. It's, probably maybe coming back into the channel, maybe not. You have lower lows, you have lower highs. Again, it's just like the other chart. Maybe this pattern of, let's see, maybe this pattern of lower highs has been broken, right? And maybe this pattern of lower lows has, well, that one probably hasn't been broken, but yeah, also on their earnings call. So there is some signs that not the Permian is, because out of all the basins, out of all the shale basins, the Permian stayed pretty constant and all the other shale basins slowed down. And on last earnings call, there was some news that the Haynesville was picking up speed again. And the Haynesville is the gassiest of the shale basins. So it looks like the export terminals are coming online. The natural gas demand is picking up. So you have some news that activity for the company is picking up. Maybe the fracking cycle has bottomed. I don't know. Could it fall more? Obviously it could, but it seems to be at least slowing down in the collapse. Because the election was so recently, we really have to see how these stocks behave. And there's a lot of people saying don't fight this rally, that this rally going into November, December, you don't want to fight that momentum. But if everybody knows that the market tends to sell off after the inauguration, why wouldn't people get 30 days ahead of that and have the market start selling off within the next couple of weeks? Let's see. Vermilion Energy. So Dutch TTF natural gas has been strong. This one has been a really painful stock to hold. I think I have been owning it since around the 13s, and it has not been fun, right? It has been, now they've paid off all the debt they want to pay off. They've been doing share buybacks. They've been increasing production, and the stock price just doesn't care. It just can't catch a break. But the Dutch TTF natural gas, the price has been strong recently. And I have a strong belief that Trump is going to figure out how to get a peace treaty between Ukraine and Russia. But I really doubt that he's going to be able to reintegrate the economies of Europe and Russia. For one thing, it's not in the U.S.'s interest. It's in the U.S.'s interest to export natural gas to Europe. So Trump doesn't want Russia and the EU reintegrated economically. And I think there's so much animosity there. It's going to take at least 10 years, maybe longer, before there's a strong push for Europe to buy Russian natural gas. And there's Vermilion Energy, and they're drilling for natural gas in Germany and in Slovakia and in Ireland. It's a similar story that, it looks like the descending pattern is probably stopped, right? There's a higher low, but there's not a higher high, right? You have a higher low, so it's kind of indeterminate. All this stuff is indeterminate. Is energy the thing to buy right now? Maybe not, maybe not. My next largest holding, and this one, I usually do these technical videos to try and figure out what am I going to buy next week. And the answer is Finance of America companies. This is what I'm going to keep on buying. Now, technically, so it had its golden cross in the middle of September. The 50-day moved above the 200-day. It's been really pushing up against the top Bollinger Band. It hasn't even fallen back to hit the 50-day, much less the 200-day. I mean, this thing has just been taking off and really aggressive ever since September. And it's tripled since I wrote about it on my Substack. And that might look like it's getting a little exhausted. You've got RSI above the top band. That's usually a sign that it could pull back in the short term. And then MACD, is this peaking? It's hard to tell because it's a coincident indicator and not a predictive one. RSI is more predictive, and it doesn't stay above 70 for very long. So could it pull back? Absolutely. If it pulls back, I'm buying more. If it doesn't pull back, I'm buying more. If it keeps rising, I'm buying more. If you want to know fundamentally why I'm buying more, I have it behind a paywall on my Substack. So $5 a month. I think this is one of the best things I've ever found, and for the foreseeable future, this is going to be the only thing I'm buying. It's currently 5% of the portfolio. I want to get that number over 10, maybe up to 15. I kind of want to be irresponsible with how much of this thing I buy. Golden cross in September, but at the top of the RSI, I think there's odds it could pull back. How far would it pull back? Would it pull back to, I mean, it hasn't been going much lower. It hasn't been falling back to the 50-day. So even if it fell, would it fall below $12.50 from here? It might not. In the next couple of weeks, if we have some selling, if we have some digestion from the Trump rally, it might not fall below 12.5. Let's see. Sibanye Stillwater. This one has been painful. I bought it at a price that's not too much higher than where it's at today. I mean, it's been bouncing around its channel. It's been so low for so long. It's not really so painful. It's got a really strong resistance to the downside right about there. I mean, it broke below it only in September. It made an amazing buying opportunity for anybody who bought it, right about $3 a share. And then on the where's the resist? There's a triple top there. So there's a triple top. What is that? At about $6. There's resist. I mean, there's a lot of places to find resistance on the way up, and it bounced off it again. It doesn't have. Well, it might have. It is making what looks like. Let's see if I go. Let me get back to the 1-year chart. This one actually, as opposed to the oil charts, which don't have enough evidence, this one does look like it might finally be in a, higher highs, higher low, right? This might have the positive momentum. As far as a short-term thing, it's sitting right here in the middle. It's in the middle of the RSI. It's in the middle of the Bollinger Bands. It's kind of indeterminate on the MACD, so it can kind of go any direction in the short term. But it's been, a pretty good candidate for higher lows and higher highs. So Sibanye Stillwater has better technicals than anything related to energy right now. And I could see myself adding some more to that now. When it finally takes off, I'm going to be mad at myself for not owning as much as I could. Let's see. Well, I'm talking about energy, though. Let me check out Peabody. So I did sell my Peabody Energy somewhere around the $29-ish range. It wasn't a large position, but it's been so well behaved bouncing around this channel. It's given people so many opportunities to buy it and then sell it, buy it and sell it, that when it really hit that top of the band, I figure that could be a good selling opportunity. Trump has been really good for coal in the past, but I am skeptical. For one thing, if he wants to get oil prices down, one of the only ways to do that is to make a market for all that associated gas. So if Trump has to choose, do we have a policy which benefits natural gas power plants or coal power plants? The benefit of having more natural gas power plants is that by paying more for the associated gas from the shale drilling, then you can bring oil prices down within the domestic US. And that's going to be important. Now, emphasizing coal would, make electricity cheaper. And electricity is needed for manufacturing. Maybe he'll be good for both. I don't know. I think he's going to be more bullish for natural gas than for coal. I think at some point, I'll have a chance to buy Peabody Energy at $25 again. And so I sold it at 29 to see if it behaves in this channel. I'm going to be watching for where it bounces around the channel. I could be wrong, right? It could be just off to the races from here. But I did sell my Peabody Energy in the hopes of buying it cheaper because it's just been so well behaved bouncing around these channels. I think on Twitter they're calling it the magic money machine. I mean, for the last couple years, if you bought it when it was at the lower bound, sold it at the upper bound, you had about 20 opportunities to make money. Now, I also sold my Warrior Met Coal, and that doesn't behave the same way as Peabody Energy. So Warrior Met Coal, that one might not fall back down. I think Peabody Energy's been a lot better behaved for trading in and trading out than Warrior Met Coal. Selling Warrior Met Coal might have been a mistake. That one might really keep taking off and running. We'll have to see. It still is a lot of, it's about 2 years away before their longwall mine in Alabama is operational, fully operational, but it's coming on in stages, so the output comes on a little bit at a time. So it could have been a mistake to sell my Warrior Met Coal. We'll have to see. Back to gold. So Equinox Gold. One of the things that sold off under Trump was gold. Equinox Gold fell from, what is that, almost $6 down to $5. I mean, that crash way below the 200-day moving average. That was a buying opportunity. It snapped back because even though, Trump is causing the dollar to be strong, and that's giving some reprieve to the gold price rally, I don't think 4 years of Trump is enough to convince the BRICS that they should use the US dollar as a reserve currency. JP Morgan already put out that 15% of central bank reserves currencies is gold. That number could go from 15% to 50% in not too long of a time frame. And then portfolio managers haven't even started buying gold yet for the negative correlation to stocks. So this has a very long time to go. Equinox Gold, let's see, it was looking as like a better trend the last time I looked at it. When you had the golden cross, the 50-day over the 200 back in April, and you've had not a terrible trend. Let's see if this is if we ignore some of that euphoria. I mean, the dominant trend seems to be on the way up, but boy, is it a painful time. It's not currently sitting at the lowest end of the channel. I wouldn't be against buying more here, but it definitely has lost the sentiment. That gold under Trump has lost the sentiment, but at the same time, as long as the gold price doesn't fall too much, the gold price already rose to a point where the miners are all very profitable. So, I mean, I think their all-in sustaining cost from everything that's not the Greenstone mine is about $2,000 an ounce, and the Greenstone mine is about $900 an ounce. And so if gold stays at $2,500, $2,600 an ounce, they should be doing really well, and they should be able to take that money and pay down some debt and also do some of their mine expansions they want to do in Brazil. So it's not terrible. It's right in the middle of its channel in a lot of ways, in the middle of the RSI, in the middle of the MACD. But definitely the sentiment under Trump has changed, which maybe that's a time to buy more. Douglas Elliman. So on the real estate side of things, the real estate market got very spooked by the rising interest rates. Now again, if my eyes are not deceiving me, and we really did make that lower high and the 10-year treasury is falling from here, if this is not a false top, right, if this doesn't immediately reverse, then I think there should be some relief for all the real estate related stocks. And Zillow just had a really strong behavior. I'll look at Zillow briefly for a moment and go back to Douglas Elliman. Right, so I think it must have been an earnings announcement that Zillow is really broken out. So Zillow is showing some really strong momentum. But I don't have Zillow in the portfolio, although I do like tech and I do like real estate. So Douglas Elliman, it had an enormous pop on the news that they replaced their chairman of the board. And I kind of mixed feelings about it because the guy was very old, but he also practically built the company over the last 20 years. And they kind of squeezed him out. And I don't think his leadership during COVID was bad, because he was the guy who pushed them to focus on the new build condo developments. So it was an odd thing to take out the chairman and then have the stock do so well when he's the guy who built the whole company. But yeah, there's this huge pop from replacing the chairman of the board. And it's digesting that, right? This area, right, it seems to be where it's hanging out for a while, right around the $2 range, right? It's hanging out there. It's hitting some resistance. The longer it spends there, eventually it'll break out above that. There's, let's see, the 50-day crossed the 200-day in September, so that was the golden cross. Yeah, it's a bullish chart. I still like Douglas Elliman. In the short term, though, I'm just buying more Finance of America Corp. Alta Equipment Group, so one of my few industrial companies, that had a massive breakout on the Trump news. And unlike a lot of the other things, it didn't immediately fall right away. Let's see, and this is one of the expressions in technicals is gaps eventually get filled. So we had the gap down from 8.5 down below 6, and that gap now is getting filled back up. So it's pretty common that when there's a gap in one direction, the gap can be equal in the other direction. We saw that on the Trump news. The gap was immediately filled higher. Alta Equipment Group, it's a parts and service dealership business model for forklifts and other industrial machinery. Let's see. RSI is into overbought. MACD looks like it could still keep going higher from here. But yeah, this is more of just gap filling. Where is it going to go here now that the gap is filled? I don't think we have a lot of information about that. I mean, this was, well, what that's saying is when something that was support becomes resistance, that would be pretty negative, right? So something that was prior support becoming resistance means Alta Equipment Group might have some hard time over the next couple of months breaking above $8. It might kind of be pinned below $8 for the next couple of months. That's entirely likely. I mean, this is a long-term investment. So should you buy it here at $8? It depends if the Trump momentum and Trump euphoria carries it, or if the technicals past support becoming resistance. We'll have to see. This is kind of an indeterminate one for me. Let's see. My only biotech, which is Neffy, the epinephrine nasal spray. Well, yeah, it's a positive trend. It's doing fantastic. It's just grinding higher. Nothing to say about it than game on, right? This epinephrine nasal spray company. Yeah, if I was smarter, I would just only buy charts that look like this. But as a value investor, you get caught up in a lot of cyclical businesses, and then you just sit around waiting for the cycle to turn. But yeah, this is a beautiful chart. There's nothing else to say. Just that it's going to keep on grinding higher for a while as they take market share. Okay. Portillo's. What to do with this one? You've got MACD rolling over. You've got RSI right in the middle. You have the Golden Cross in October, where the 50-day moved above the 200-day. You have it bounce off the top Bollinger Band. But the 50-day might give it support. So in the short term, it might bounce off the 50-day moving average. But longer term, it is a positive, right? It is positive off the lows. You have higher highs, higher lows for the time being since last August. So the medium-term trend is up. The very short-term trend is it bounced off the top Bollinger Band. It's really good odds it's going to bounce off the 50-day moving average. We'll have to see. I'm a strong believer that 2025 is going to be good for consumer discretionary. Restaurants have had a really hard time in 2024, but Portillo's is very, what's the name they call it? Everyday value, that they're trying to be, you know, a very big source of value for their customers. Let's take a look at some of the uranium stocks. So Energy Fuels. Well, you do have energy stocks rallying on the Trump trade. It bounced off the 50-day, which is pretty nice. And the 50-day is converging with the 200-day. So this is one of those things that might be setting up for an explosive move higher, because when it does, if it does make that golden cross, then a lot of people find that are screening for things with positive technicals. You've got a lot of resistance right here at just a little bit under $7. So it has a lot of room to climb from 630 to 7. It's been making higher lows since September. The bottom might be in for uranium. It's not an aggressively positive chart. And Energy Fuels, it's not an aggressively uranium company, because every time the chairman speaks, it's always about rare earth elements, which is good for the long term, but not good for what investors want to hear right now. UEC, Uranium Energy Corp, that's Amir Adnani's company. The same thing, it bounced off the news with the Trump victory. Let's see. Not a lot to draw from that. It's been doing great since the lows in September. Everything uranium has been doing great. Check on Centrus Energy. Centrus Energy just had this massive rip higher. They announced a $350 million convertible bond offering, crashed the stock, and then it's been grinding higher since then. So I don't think much is going to slow down this freight train, because they have such an amazing position. They do have competition, but their competition, for example, ASPI, they are going to have their first production in 2027. Well, Centrus Energy is producing now. And when you think about the buyers of enriched uranium, they want to make long-term contracts. So to make long-term contracts, you want to make long-term contracts with somebody who already exists, not somebody who's going to exist later. So Centrus Energy has a $4.8 billion backlog of work that extends out to the year 2040. So companies are signing 15-year contracts today. So by the time ASPI has production in 2027, how many more 15-year contracts is Centrus Energy going to have extending out to 2045 when their backlog is already $4.8 billion? Now, $2 billion of that backlog is not firm, because all of the small modular nuclear reactor companies can't sign a real committed purchase order because they're not far enough along in development yet. But they signed contingent purchase orders. So it's a $2 billion contingent backlog, $2.8 billion firm backlog. So this company, it could easily just keep on grinding higher. That knockdown on the convertible debt offering was a pretty big gap, but that gap is already been half filled. So we'll have to see. I don't see a change in the momentum completely. I think it's still. I mean, it didn't even touch the 50-day moving average. The 50-day moving average is above the 200, and it's pretty wide. I think Centrus Energy could keep grinding higher. Let's see. SoFi. Oh wow, SoFi is grinding higher. SoFi is a little bit more expensive of a stock than I usually get as a value investor, but pricing in their growth, I found it to, well, at least at the price where I bought it, I think I bought it here in the 8s. Pricing in the growth when it was in the 8s, as a value investor, I could still buy it. Now it's in overbought territory. Sometimes overbought becomes more overbought. So it doesn't have to fall back just because it's overbought. You had the 50-day cross the 200-day, the golden cross earlier in October. So this could be, I mean, this could just run away and break out, especially when you compare it to other fintech companies like New Holdings, NU. The metrics for this company are nowhere near as expensive as a lot of other neobanks or fintech companies. They have, I think, one other massive tailwind, and that's if Trump replaces Lena Khan at the FTC and allows for mergers and acquisitions, then small cap tech could really rally on all the mergers and acquisitions. And when small cap tech rallies, you'll have an IPO wave. As soon as the multiples paid for small cap tech get high enough, there's a backlog of hundreds of companies that want to IPO. And SoFi gives their retail investors access to IPOs on their platform. So they'll be a direct beneficiary. If the stock market gets hot, right? If small cap tech becomes more fun to gamble in than DraftKings and sports betting, if the stock market becomes fun again, SoFi will be a huge beneficiary of that. So would I buy more here? I don't know. That's overbought can become more overbought, but for me, I think this is getting a little exhausted. We'll have to see. I wouldn't buy more here, but it also probably is not going to see $8 again. If it did come back down, I'd say, you know, it might fall back down to 11 on a bit of a retracement, but I don't think it'll fall back down to 8. If I had a chance to buy it at 10.50, I'd be happy, but I think it's more likely the chances to buy it would be at 11. But we'll have to see if there's any sort of drawdown after the Trump euphoria and how deep it is, right? Is that a 5% drawdown? Is it a 10% drawdown? We'll have to see. Okay, Applied Optoelectronics. This is the only small cap stock that I found that is a direct beneficiary of the data center build out of artificial intelligence. And I've been looking, but it's so far outside my competence that I have a hard time finding them. Now, last earnings, the earnings itself were not amazing, but the guidance was toward 40% increased revenue. So the guidance was amazing. It popped from 17 bucks to 27 bucks. Now in trading, I sold calls on my Applied Optoelectronics position at a strike of 30, which is double from where I bought it from, so I'm very happy with that. And it's this is quite a spike. Now, you can see this stock is capable of going for a couple of months in overbought territory. So sometimes overbought becomes more overbought. But the combination of just the Trump euphoria needing to digest a little bit, this massive gap up, there's a good chance that that gap will at least get filled by half, maybe spend some time around $23, $24 for a while. I think there's pretty good odds that my covered calls at a strike of 30 will expire worthless. And I could easily be wrong. But you know, I was able to take a couple dollars off the table, and I want to take that money off the table and buy more Finance of America companies. Let's see. Opendoor has just been a painful stock to own for a very long time. It's building one heck of a base, though. At some point, so I think this pattern. Let's see. Whatever they call this pattern is when it finally compresses, it breaks out. What do they call that? A bull flag. So this compressing. It's just preparing for an eventual breakout.
and it's directly linked to existing home sales, and not even new build home sales, but only existing home sales. And existing home sales need the Treasury to come down. And it didn't get a bump with Trump, but the very last day of trading, you can see once market participants seem to think, okay, right, the fear that we're going to break this trend line in the Treasury, the fear that we're not going to have a lower high, the fear that this overall interest rate trend changes. Like, as soon as we have one day of falling 10-year Treasuries, then Opendoor caught a bid again. So if we do have that channel of falling 10-year Treasuries and falling 30-year mortgages, yeah, it could break out. It's forming that bull pennant. Let's see. Burford Capital. It's a stock that I love, but it's just been doing nothing for so long. It did break above 14 for a bit and fell back down. If I look at it, right, those are higher lows, and those are maybe, if you squint your eyes hard enough, higher highs. Maybe Burford Capital's finally catching a bid. If I draw the lines a little bit differently, though, you know, it's could easily draw them like this and say, yeah, you know, I'd probably call this an unconfirmed breakout. Maybe this needs a little bit more confirmation to know that it's really going to run. When it runs, though, so when there's evidence, so Burford Capital, they do litigation finance. And during COVID, these diligent government servants, you know, they were lazy for years. So the case backlog now is enormous. They have lawsuits that they've financed that are now 3-4 years old, and municipalities are trying to work through this backlog. So they have an enormous backlog of cases that are going to get settled or decided, and they have a lot of hidden growth, right? Their book of litigation has been growing, but their completed cases hasn't. So it's when that money starts rolling in, I think it'll roll in pretty aggressively. So I don't think there's evidence of a breakout yet. It really needs to be confirmed. It would have to, at least the higher lows look pretty good, but the higher highs, not nearly as much. I think that there is, where's this long run resistance? Right about 1425. So past support becomes future resistance. I'd love to see it stay above $14.25 for a sustained period of time. I don't know that it's going to do that soon, because I don't know if litigation finance is a Trump beneficiary with his deregulation wave. But the thing about business is there's always lawsuits, so they always have something to do. I think it's a very good secular. Oh, what did I just do there? I lost my chart. Did I run out of free samples? I might have to stop here. I might be out of internet connection. Told you, ever since Hurricane Milton swept through, my internet has been just terrible. So I think that's what's going on here. Yeah, there we go. That was just an internet hiccup. I haven't been doing a lot of interviews recently, because ever since Hurricane Milton came through, I just had terrible internet access. Let's see. Another stock people wanted me to look at was Cardlytics. This is one that when I showed it to Mitch, he said, like, there's no positive momentum. So that was about a month ago. Cardlytics used to look like this. I said, yeah, there's no sign of any positive momentum. But now Cardlytics looks more like this. Hold on. So now it's starting to look a little bit different. Now Cardlytics is starting to look like there is some positive momentum. So this is one of those rare stocks that I think could genuinely become a 50 bagger, because it's so cheap right now and it has such an enormous moat around itself. So last time Mitch saw this, he said, don't even touch it. There's no positive momentum, and there was also not enough resistance to say a floor had been found. But now it looks like maybe there is some positive momentum. I'd like to get Mitch's take on it when he comes back. So Cardlytics, I own some. I want to own more. I got to fill up my buffet on Finance of America Corp first, though. Let's see. I had some, so I asked online what people wanted to see. And I think a lot of the things that people wanted to see, I haven't talked about them for a while. So are some of the shipping stocks. Shipping has been really hammered hard. So I have Cool Company. They do natural gas, LNG carrying ships. Now, when I wrote about it, I'd have to check what price it was when I wrote about it. Hold on. When I wrote about it, it was $12.24. So what did I do? Did I nail the top? Probably nailed the top pretty well. And it's taken a pretty big hit since October. I don't know exactly why. Now that's close enough to the election, and it's also close enough to polls starting to move in favor of Trump. What could be getting priced in here is peace in the Middle East, that the Houthis are going to stop blowing up ships. Shipping day rates have been high because the Houthis are blowing up ships in the Red Sea, and so people have been going around the Cape of Good Hope in Africa. So the longer the ships have to go, the more demand for days of shipping there are, so the day rates of ships go up. So this could be the market pricing in peace with the Houthis. But Cool Company, I'd have to remember the specifics. Cool Company, I think, had Cool Company had at least 5 years of fixed contracts. So their dividend is safe going out 5 years. Now, if it's fallen 15%, that's, a full year of dividends it takes just to break even. So that can be a painful journey, a painful hold. But technically, it broke down. It's not great. It was over $12 when I wrote about it. It collapsed into 9 something. It's back in the 10s. It's below the 200-day moving average, and it's been below the 200-day moving average for almost a month. That's a bad sign. If a stock dips below the 200-day moving average, for a day, right? So here in September, it had 1-2 days below the 200-day moving average. That was a buy, and it immediately bounced back and got above it. When it's a month or 3 weeks below the 200-day moving average, that's probably not a buy. We'll have to see. The 50-day is coming very close to the 200-day to make a death cross. Again, I don't think the dividend is in any danger because they have 5-year fixed contracts for most of their fleet, but the chart looks pretty terrible. The other one in that boat was HOG. H-O-G, let's see, HMLFP. Is that right? So this one hasn't had, let's see, what symbol did I use for HOG? H-O-E-G-F. H-O-E-G-F. No, it doesn't like that one. It likes HOG LNG Partners. No, I want the car carrier. This one, maybe because on the pink sheets it can't find it. That's okay. So I don't have a chart for the car carrying company. That one is down 10.5%. They have, again, 5-year contracts. They have 5-year contracts and 100% payout policy of cash limited dividends. So that was HOEG Autoliners, H-O-E-G-F. The stock is down, but it's down about half a year's worth of dividends. So now you've got an ugly break even. And then Okeanis Eco Tankers. Oof, that is a pretty serious breakdown. So I wrote about that when it was $30. Now it's fallen 22%. And it's grinding straight down. And it's falling straight down at about the same time the other shipping stocks were, which, again, it might be because people started pricing in a Trump victory. People start pricing in peace in the Middle East. Now, tankers are kind of a different animal because drill, baby, drill means maybe more volume of oil. tankers don't make money if the price of oil is high. Tankers make money if the volume of oil shipped is high. So this is one where maybe the market is wrong. It's one thing for the, well, Cool Company also. Cool Company is natural gas carriers. So day rates might fall if you have peace in the Red Sea, but day rates might rise if the volume of fossil fuels being shipped around in these boats goes up. You also have it heavily oversold. So in the very short term, buying Okeanis Eco Tankers at $23.71, I think that might be a buyable dip. I don't know. I'd love to get Mitch's take on this, but this might be a trade alert that with Drill Baby Drill from the Trump administration, $23.71, this incredibly oversold RSI, I think Okeanis Eco Tankers could be due for a dip. It still has several weeks below its 200-day moving average. The 50-day is converging, but I mean, this is pretty dramatically oversold here. I don't know what the dividend yield is off the top of my head. Or does it say, yeah, 18% dividend yield. Okeanis Eco Tankers, I think Hoeg Autoliners and Cool Company had the firm contracts. I think Okeanis Eco Tankers didn't have firm contracts, but they had a favorable order book. So this dividend might be less safe than some of the others. I don't think they had, I'd have to check my write-up about them. I don't think they had the same long-term contracts. But yeah, this might be a very buyable dip here. That might be more of a buyable dip than Cool Company. Because Cool Company, for one, it didn't fall quite so much, and it's already bounced back for half of what it fell. You usually expect that as a retracement of about half of the fall when it fills the gap. But Okeanis Eco Tankers, yeah, that's, for a short-term trade, that's looking pretty exciting for me, but I have the bad habit of catching falling knives. I'd have to listen to the earnings call and see what their guidance is on how safe that dividend yield is. But yeah, that's looking pretty attractive for me. I don't always have the best instincts. That's looking pretty attractive. Let's see. What other stocks did people want to see me talk about? I had a lot of, whenever I write about something and it falls immediately, I get some well-deserved feedback on Twitter and on Substack. Eco Patrol. So it was $8.10 when I wrote about it. It's since fallen to $7.36. I mean, part of this is because with Trump winning the election, the dollar strengthened hard. Money was flowing from international markets into the U.S., and I was expecting that to reverse because it's been going on so long. I was expecting some sort of reversal of money to flow out of the United States and back into other countries. And that process has not reversed, it's only accelerated. People are selling stocks everywhere in the world to buy more US stocks, and Eco Patrol has been crashing. But and they pay a variable dividend, so don't pay attention to that 40% forward yield. It might be closer to 15% or 18%, give or take around there. I think it's planning about $1.20 to $1.20 in dividends. So what would that be? So if they pay $1 in dividends next year, that's a 13.5% yield. If they pay $1.20, that's a 16% yield. Yeah, it's, and also you have the RSI being extremely oversold. I bought a small, I think I bought it right around $7.94. You just have to, I mean, how long can something keep on falling? There's an old cliche, you know, what do you call a stock that's down 95%? That's a stock that was down 90% and then it got cut in half. And yeah, that's a very real possibility. But at some point when something has this much operational cash flow and that's big of a dividend, how far can it fall? I did buy some. I don't regret buying it just because it fell from $7.90 to $7.30. I don't regret buying it. I would buy more, except, like I said, every marginal dollar until I have a 10% position, at least, maybe even a 15% position, is going to be Finance of America Corporation. And that, if you, I've talked about it on some other YouTube channels that I've been guests on, but if you want to know all the details about it, the information's behind my paywall and my Substack. Well, I think I've been looking at the technicals now for about an hour. doing it on my own without Mitch's help to make sense with all the crayons and this technical analysis stuff. I'm trying to get better because it's a dangerous game to be doing fundamental analysis without paying attention to the technicals. But I'm still an amateur at it, so I'm still really appreciating all the help I can get. If you saw the charts that I did and you came to a different conclusion, please feel free to write about that in the comments. I really appreciate any feedback. And thank you for supporting and being a subscriber. So I really appreciate you guys. This is not financial advice, and thank you for listening. Have a great day.